Good morning, good morning, good morning. Alrighty, let's do a quick voice check. Today we're going to do a mellow mango live. Smash the likes, smash the likes, smash the likes. Yeah, I just asked Krisha to make the announcement. Thank you, Mark. Or you could do it too, unless Krisha's already done it. Good morning, Julian. Good morning, Mark. Good to see you in here, Marin. 2 lives in a day, yeah. Krisha did one, 12 hours ago, less. I actually wasn't going to do one because Krisha did one, but I do want to give you guys an update on how I am viewing the markets. Hey, Boris. Is the music fine, by the way? Was it too loud? Oh, Ian, is that you? I'm Bumblebee. How's it going, buddy? Alright, I haven't done too much prep for the setup, so let's just hope everything is okay. Is the lighting good? If so, good morning, good morning, good morning, good morning, Madam Sean Dex, and welcome you back to Mango Live. I'm feeling a bit kind of weak today. Not sick, weak. I had an intense workout yesterday and I don't think I ate enough. So even though I slept well, I slept really well, I'm feeling like kind of lack of energy. So forgive my lack of energy today. I think I just need to hydrate. So I have a nice little... Markets are actually looking better than I would have expected. So we're going to do an update today. We don't have just good news across the board, but there is something really interesting to look forward to. But before I do that, I just want to get a quick sentiment check. What do you guys think? Up or down? Just type up or down in the chat. Moonshot Silver says, I'm a perma bull, but this just feels like a bounce relief rally. Marin says down. Wolvie says up. Richard Francis says, good morning. Hey, Sean, thank you for the advice last week not to get pushed off my Bitcoin position. I'm still holding. Keeping it mango, buddy. Good to see you, Francis. Today, hopefully we can give you a bit more clarity, right? Because the markets are dynamic. We have to constantly assess. Someone in the live, not the live, in one of Krisha's streams, one of her daily videos on Cardano, asked the question that I responded to. Maybe I can pull it up for you guys really quickly. Let me try to get it. I think it's really important for all of you to read that answer. Comments, filter. I have responded, apply. Oh, he responded too. I hate that YouTube does not send me a reply to, sorry, it doesn't send me a notification when you guys reply. So like if I respond to you guys get a response. But if you guys respond back, I don't get a notification. Okay, this is gonna be something that we can talk about today. Okay, so let's just jump into it actually now. We'll go through. We do want to do a dashboard check, health check, but okay, this is the okay. Maybe I'm getting sick. Holy crap, man. Okay, C Clubhouse today. Okay, in a few hours, Kusha's going to be presenting in today's C Clubhouse, and she's really excited, which makes me excited. She ran into my office space the other day, my office space, and she was like, Sean, I'm presenting Seed. I'm presenting. I'm like, okay, sure. And she says, like, yeah, I'm presenting. I'm like, okay, cool. So she has something that she's excited about, which makes me excited, because whenever Kusha's excited, I make a lot of money because I trade her excited ideas better than she trades ideas. Don't you guys often come across that, where there's someone else who presents an idea, but you will have more conviction in that idea than the person because it fits your trading personality a lot more, right? So I don't know whether this idea is going to fit my trading personality. There's a lot of times where she'll present an idea and it just doesn't gel well with my style of trading, so I just ignore it. So, but it's those ideas that I hold on to that make me go, whoa, I like that. I'm going to trade that. So yeah, like they're trades, right? That I've presented to you guys, and you guys have made so much more money than I have on those trades. So I'm excited for her C Clubhouse presentation today. So I think it's in 2.5 hours, right? So make sure you guys make it. Do not miss it. I'm not sure whether it's going to be recorded or not. It's all up to Kusha. That's how we have it at C Clubhouse. The presenter gets to decide whether or not they want it recorded. Hey, how's it going, Ray? Good to see you in here. It's in 1.5 hours. Okay, yeah. So an hour and a half. Oh, wait. Are we changing the timing because of the daylight savings nonsense? No. Or am I confused? Let's please stick to the same timings, guys. Let's not apply these archaic time zone principles to the rest of the world. Yeah, just because Europe switched doesn't mean the rest of the world needs to switch. So, no, I'm not. We will not promote that archaic what's the term I'm looking for? Tradition. EU decides that boat sailed 124 years ago, buddy. We're going to go on Southeast Asian time moving forward. We're coming back instead. Oh, man. Okay, so today, in today's live stream, we're going to be doing a health check on the market, the monthly, the weekly, the 4-day update. So essentially, what we talked about in the previous live stream, right, where I went through all the time frames and I asked you guys, can you be bullish or bearish on the chart? Or rather, the question was, can you be bearish on the chart? Because everyone is scared, right? And I asked you guys a very, very simple question. Regardless of what happens, whether we pull back or not over here, Where will you turn bearish? Can you be bearish over here, right? Okay, we good to go? Marin says I'm not bearish, but he's expecting more downside. Yeah, that's fair. That's completely fair. This is why it's an archaic principle, right? Archaic tradition, because everyone's confused on everything. Like it's not worth it, man. You just stick to one time zone. We're gonna use the block time moving forward. I'll turn bearish when we lose the weekly. All right, but what's the weekly? Weekly what? Weekly trend, weekly support and resistance, weekly FVG, what? Weekly what, man? Be specific. Weekly trend. All right, fair. Okay, so with that, let's go ahead and get started. So those of you who are recording the time zones, the timestamps, the timestamps, not the time zones, the timestamps for this live stream. This is when the live stream officially starts. We're going to go ahead and get started right over here with the monthly. Remember, guys, we just opened up a monthly time frame. I'm going to ask you guys the same question I asked in the previous live stream. Can you be bearish on this chart? Is it fair to be bearish? Is it fair to even expect downside over here, to be honest? Because if I look at it over here, I'm like, hey, we've retraced half of the previous month. Is this enough in a bull market? If you are saying that this is a parabolic bull market, would this be considered enough? You just zoom out, maybe that's, no, that's true. It's true that we can't retrace the entirety of the previous month, right? And then bounce, right? We've done it multiple times in 2017, over here too. Like this must have got a lot of people, not must, I know for a fact, this got a lot of people thinking this was the top, because $5,000 was a psychological level, right? Even hitting 5,000, by the way, guys, over there was ridiculous. People thought 7,000 was way too overbought, right? We retraced the entire month, and then we did another 5x, 4x. Well, actually 5x, we retraced all the way down to 3,000. And then went up to 20,000. So we did a 6x. After people, I just want you guys to fully digest that. After people thought that it was clearly the top because we hit a psychological level of 5,000 to 7,000, we retraced down to 2,900 and did a 6x. Okay, imagine trying to call the top, because at this juncture, you could have been right, feeling great about yourself the entire month. The entire month you're feeling great about yourself. And then the market does the 6x. Just digest that. And think about, where would you feel more pain? Because where you sold, thinking like you were a genius at around 3,000, ended up being the bottom of the bear market. So you would have just been better off doing nothing, right? That's crazy when you think about it that way. Anyways, let's get back on topic. The monthly, if you're just looking at the monthly, guys, the zone to hold on the monthly before you look for consolidation, monthly consolidation, which is prolonged, like 6-month consolidation, is 58K to 61K. As long as monthly candles are closing above this, this is just an impulsive move on the monthly. This is one big impulsive move. We haven't put in a high low on the monthly yet. That is insane. And that's, well, Bitcoin kind of does that, right? It doesn't put in high lows in its parabolic run, which is why I think this market ends this year, because it's been in a parabolic run. How can you look at this and say this is not a parabolic run? You guys are going to see it in hindsight, and when it's sitting around here, you're like, yeah, Bitcoin went parabolic. What were we thinking? What the hell were we thinking? Right? It's the same story over here. Like when we went from 2020 September all the way to 2021 April, it was just going up in a straight line. It was going parabolic, but we kept counting. Anyways. The parabolic run had started, and we were like looking at a more prolonged cycle, and we expected a prolonged cycle to give us our target, but the target was already hit based on the fact that the monthly went parabolic, right? Over here too, I think that we end earlier, provided we stick to the pattern. I'm going to give you guys the criteria. the criteria upon which I will say, okay, we are likely going to go into 2025, deep into 2025. By the way, when I say the cycle ends this year, 2024, it could be November, it could be 2025 Feb, right? I'm marking out a zone over there too. You guys know I like zones. Even with my timing analysis, I like zones, right? So when I say November, it could be November, but it could also be Feb of 2025. So be careful over there, right? Don't try to get too nitpicky with that. A lot can happen in a few months, a lot. Julian says, I guess monthly consolidation over here above the 2021 all-time high for a few months would be healthy for the market and bring it back to normal cycle sync, next leg up. Yeah. So it would bring it back into equilibrium, is what you're saying, Julian, right? Which is, yeah, like this is what I've been a bit concerned about, right? The 10 SMA is so far away from price. If we have monthly consolidation over here, the 10 SMA is going to come up a bit more in equilibrium with price. But you guys gotta take that with the downside that a lot of people are going to start feeling antsy and hodlers are going to start turning into sellers. Okay, they may want to start hedging positions. That's gonna bring in a lot more sellers into the market the longer price stays over here. On the flip side, that kind of fear is exactly what you want for the market to just rip, right? Because it's the same logic I discussed over here, where a lot of people I know, big traders that I know, who started selling their Bitcoin saying, you know what, we'll buy back lower or we'll just buy back later, right? And they never got back in. They weren't able to get back in because the market did this. It rallied from 28K all the way up to 35K. In hindsight now, they were just better off buying there. But at the time, it was too painful to buy back, right? So what ends up happening when people sell their Bitcoin, okay, someone else is buying, right? So when you have large holders selling their Bitcoin in a zone like this, you have new holders coming in with a new buy level, right? So people who bought here, for example, let's say you bought here thinking you're a genius, okay? You bought here and then you sell over here. So you've taken your profits and you're out of the market, but the people who bought here now, they are fresh buyers, right? So they don't have profits and they're looking at it as a brand new cycle. They're willing to hold on longer. People who bought over here are thinking to themselves, man, after such a long bear market, I'm very happy to take profits. And you essentially eliminated those weak hands who are happy to take profits early, right? Each time you consolidate, you are getting a new batch of hodlers who are waiting for profits before they are willing to sell, right? And the higher the market goes, guys, their conviction for even higher goes up higher and higher and higher, right? So because of this bear market, this recency bias, okay, in Seed we talked about this, right, in a lot more detail in one of the more recent modules. This recency bias gets them to sell early. Now these guys over here, right, they don't have the same recency bias, but they kind of have some recency bias of the previous bear market. So they sell over here. Now these guys, if we get a new batch of hodlers who are really willing to hold, okay, really willing to hold, supply and demand economics along with behavioral economics. What I'm discussing over here, guys, is essentially a combination of behavioral economics and traditional supply and demand economics, right? As price goes up higher, you're going to get more supply into the market, right? And this is, by the way, if you hear any of these investors or traders talking about, oh, the Bitcoin halving is coming up, oh, TradFi ETF is coming up. It's simple supply and demand economics, guys. Price is going to go up forever. Bullshit. Fucking bullshit. It angers me to no end when people say price will go up forever because of simple supply and demand economics. You know what supply and demand economics means? It means that as price goes up higher, there's more supply coming into the market. You don't look simply at your side of the equation and say, okay, Bitcoin halving, ETF halving means the demand is going to be there forever, right? And the supply is not going to change at all. No. Yes, the halving is going to affect the supply. Yes, the halving is going to affect the supply. Yes, the ETF is going to affect the demand. At this price, At this price, it's going to affect it and cause a change in equilibrium. But as soon as that equilibrium is changed and readjusted at a new price, well, you know what happens? Demand is going to reduce. At a high price, demand reduces. At a higher price, supply increases. That is supply and demand economics. That is supply and demand economics. Not your bullshit fucking... Oh, God, sorry. But yeah, price is not going to go up forever, guys. Okay, it will go up. It will go up until it will go up until we reach equilibrium, but it's not going to go up forever. And it angers me. It angers me, man. So, where were we? Yeah, over here, guys. We were talking about the combination of traditional supply and demand economics along with behavioral economics, right? Because of recency bias over here, the people who buy over here, if they are really truly looking to hodl, right, they are going to be waiting longer before they take profits. Okay. Mock says, oh yeah, did you see that they moved 2 billion from Coinbase? Yeah, so now that's the question, right? If we're seeing, there you go, price has gone up and the US government has become a seller suddenly. They were hodling for so long and now they've become a seller, right? As price goes up, the supply is going to increase, guys. Okay, the miners are going to become increasingly irrelevant as the price goes up. Now, I'm not saying price is not going to go up, but I want you guys to have a healthy expectation of what is going to happen as the market rallies. It's not going to just keep going up without supply entering, right? Yes, the Bitcoin halving is going to have a supply shock, but price going up is also going to have a supply shock, guys. Julie says, I think they sold 2K BTC yesterday, causing those 4-hour long upper wicks. Cool. So we have a distribution from weak government hands because they are massively in debt, right? That's something else you guys need to think about. We have a government who's massively in debt, looking to sell to reduce their debt a tad bit, right? Well, similarly, you're going to have a lot of people at 200K Bitcoin, 150K Bitcoin, whatever the price is. They're going to be like, you know what? I'm massively in debt. It could be a house. It could be a mortgage. I can sell a bit of my Bitcoin and reduce my debt. Maybe not the entire portion of my debt. Maybe you have a $2 million house and you sell one Bitcoin at $200,000. You're reducing your debt by $200,000, right? 10% of your debt eliminated like that, and you still have a position. So like I can sell just a tiny bit of Bitcoin to decrease my debt by 10%. Why wouldn't I do that? You see how higher prices draws in more supply? Does that make sense? I'm embedding the passion and the anger into my analysis today, so that way you guys will remember it, right? Whether it pisses you guys off or not, it is something to remember, and you guys will remember this basic economics lesson for the rest of your lives. I'm glad to hear. Sometimes I feel a bit guilty going into these passionate rants. But equilibrium. If price does start consolidating over here, or we have one of two scenarios, right? Either those long-term hodlers get more and more antsy, right, and price actually capitulates, and we capitulate due to people just waiting too long. Like everyone who hodled over here, right? When I say long term, I'm talking about people from around September 23rd. I'm not talking about the on-chain analysis long term hodler list, which is like 5 years or something, right? I'm talking about people from around here, September 2023. These guys are going to be like, all right, that's enough. I'm going to take my profits. I'm sitting in my profits for too long. I expect the price to go up by now. I've reached my time stop loss. Some people, they're like, I'm going to stay in this market only for so long and then I need to get out, right? A lot of people have like, they plan according to hey, I need to buy a house in 2 years, by so-and-so date, I need to take profits out of the market. The market has given me enough, I'm out, right? If they distribute into new hands that are willing to buy at these prices and they're accepting, going back to our candlestick analysis, right? If they're willing to accept the price over here, then you're going to see consolidation that Wyckoff would call accumulation, right? And then you're going to see the next Elliott wave 5, I guess, into 150K, right? So you see how all of it comes together, but it's all really an encapsulation of Elliott wave analysis, your Wyckoff distribution accumulation. All of this is just an encapsulation of behavior, okay? It's a way to represent human behavior, and that's what we need to understand more than anything. Human behavior drives markets. Technical analysis is a way to visualize human behavior. So we spent a lot of time just on the monthly chart. Damn, this was supposed to be a 15-minute stream. I guess that boat has sailed. Yeah, so monthly looks fine. As long as we're holding 58K to 61K, we're fine. The 10 SMA going up over here is going to be healthy, just like Julian mentioned. But we don't want to spend too much time over here too, right? Because that does put Bitcoin in a position where we'll be looking for maybe deeper down into 45K, which I'm okay with. Okay. Let's go ahead and talk about the weekly now. So the monthly is fine, okay? The monthly is fine. Is the weekly fine? Remember we talked about the monthly, the weekly, and the 4-day. The monthly has to hold around 58K. The weekly has to hold 65K. Okay. As things stand, if the weekly closes over here, it's not going to be a good picture. It's not going to be a good picture because we would have lost a key weekly level coming in at around 65,000, right? Yeah, 65,859. So we can look at it as 66K, I guess. Let's just go adjust it a tad bit. Okay, I wasn't too precise with the level. I think we should be precise. So let's go ahead and look at the candle open over here. Is it 67K? Oh, the 4-day. Did I get it wrong? Why did I write 65K here? Let me just get the exact number for you guys. 67.1K. 1K. Yeah, so the number doesn't, I mean, the number does matter if you guys are writing it down. What matters is the horizontal, right? The structure is what matters more. So 67,118K. I think it's the 4-day, that's 65K, right? Either way, you guys are getting the gist of it, right? It's essentially this horizontal line right over here. If the weekly closes underneath the close of March 2024, so, yeah, March 18, 2024, if we close underneath there, then it's not going to be a good picture at all. At that point, you should be looking for further downside. But here's the thing. The weekly is closing in 3 days and 16 hours, right? The 4-day, on the other hand, is sitting at, yeah, it's the 4-day that's 65K. I think I copy pasted. Okay. The 4-day is sitting at 65K. The 4-day level is sitting at support. And the 4-day is closing in a day and 16 hours. If the next two 4-day candles hold 65K and bounce up from here, right? If we see support over here and bounce up, the weekly is likely to close above this level as well. This is where your multi time frame analysis comes into play. You also have the monthly parabolic move going in your favor. Okay, so we have the monthly still looking good right over here. We have the weekly that's under threat, but the weekly is sandwiched between two bullish time frames, the monthly and the 4-day. The 4-day, it's bullish as long as we're holding this level on candle close basis and we're holding this wick low at 60K, right? If the 4-day comes down, takes out this low over here, right? At that point, you have to really watch to see whether or not we can actually bounce up in the next few hours, because we only have a day and 16 hours left, and hold 65K. So be very careful over there, because if we take out these lows and you're in a trade, I would look to hedge against this level over here, any bounce over there, because the market's going to try to defend it. The market's going to try to defend that candle close. Not for sure, but if it does, that's a gift to hedge your position, okay? And then if you close above, unhedge. If you close underneath, just hold on to your hedge, because the market's likely going to do this. Okay, you guys get the idea? Okay, so weekly, if the 4-day comes into play within the next day and 13 hours, 16 hours, we may see the weekly get defended as well. Okay, so watch for the 4-day to defend the weekly. If the 4-day actually defends the weekly, this picture over here, guys, I'm pretty sure you guys are seeing it, right? There's a bull flag right over here. And this is where things could turn really bullish. Okay, because we have a bull flag structure over here that is so clean that if it does break up, the market's going to enter all at once. But it's so clean that it's making me doubt it, right? It's almost too perfect. I'm pretty sure the whole world is looking at this. But that doesn't mean you don't play it. Okay, so what's the picture over here? The weekly is under threat. The monthly is looking good. The 4-day is putting in a potential bull flag as long as we're holding 65K. Clean bull flags usually don't play out. Is that correct? I wouldn't say that. I say you still play the trend. It's just that this is what happens. Everyone is in position for those clean bull flags under bullish conditions. And because everyone is in position and the market hasn't rallied yet, usually clean bull flags rally a lot earlier, right? Because the market is already in position, there's no one else left to buy, those bull flags don't see continuation, is the better way to put that. They don't see continuation because everyone who's left to buy has already bought. However, in these kind of conditions where a lot of people are feeling antsy, okay, you may see a lot of hedgers unhedging, causing the market to go up. You may also see a lot of shorts closing their position, causing the market to see continuation, right? In these kind of market conditions, because people are kind of worried, you actually may see continuation out of this, because while it's a clean bull flag, the psychology of the market might be looking at this as a double top M, right? You could look at it that way, especially considering the weekly, especially considering we're sitting at all-time highs, right? The way I trade this is like, as long as you're bull flagging against a key level, that's bullish, right? And we are bull flagging, we are consolidating. You have to look at this as bullish until we lose those levels. The weekly hasn't closed underneath that level yet. The 4-day hasn't closed underneath that level yet. Because remember, guys, what we talked about in the beginning of this week was the monthly is looking good, right? Sorry, the monthly is looking good, the weekly is looking good, and the 4-day is looking good. As things stand right now, the weekly is not looking good, but that does not mean the weekly is going to close like this, right? The 4-day could step in and the weekly could look fantastic. In fact, the weekly could bounce all the way up above 69,000. If the weekly closes above 69,000, that's going to be great, because that is saying the market is not accepting prices underneath this horizontal here, right? So this picture could change in 3 days. So watch for that, right? Now, the 4-day, if it does break towards the upside, you can look for the continuation. I'll be looking towards $80,000 still, right? $78,000 to $80,000. And Kusha says that if we break higher time frame levels above 78K, 80K, she's looking straight towards 200K. Her target's not mine. So that's when things will get a bit wonky. Now, we know that the weekly is under threat and we're looking towards the 4-day to save the weekly. Okay, but to look for the 4-day to actually have that move to save the weekly, we can look towards the lower time frames, lower than the 4-day, to see if there are any clues. That's where we can go towards the daily now. Okay, now over here you guys can see I have the bull flag drawn out. I also have the Mango equilibrium tracker right over here. You're looking at the daily. The daily is under threat of actually flipping over here as well, but for now it's looking good, and you got to play what is in front of you. Okay, we are maintaining these high lows, and over here, guys, this is actually looking pretty constructive. If we start moving towards the upside over here, this could threaten a breakout. Like if you're just playing this as support and resistance, okay, you're not a trend trader, and you're playing this as support and resistance, you're buying over here, looking for the market to drift all the way up over here. Now suddenly, if you're a high time frame trader and you're looking at the 4-day, well, if we have candles drifting on the daily up towards resistance, well, the 4-day is going to close fantastic. Well, if the 4-day closes somewhere around here at 71,000, what's the weekly going to close at? Well, the weekly is going to close at this horizontal, above this horizontal I just mentioned, right? 69,000 is the horizontal. The weekly ends up closing 71,000. That's suddenly a really, really good candle that just scared people. The next week is just going to blow through, likely, right? Because one, you're going to have the weekly closing fantastic, you're going to have the 4-day closing fantastic, and the daily is going to be threatening this bull flag breakout. Does that make sense? So when are we wrong on these ideas? Well, it's the same story, guys. If the daily breaks down over here, well, this is an M-like formation or a symmetrical triangle that has broken down. It's the same thing, right? Same thing. And you're looking towards a measured move around $53,000. Well, I wonder whether $53,000 confluences with anything. We're going to go back to the weekly. We're going to go ahead and turn on the dynamic, and the dynamic upper zone is coming at 56K, lower zone is coming at 53K, right over there. So if we break this down, guys, if this breaks down, my bids are going to get hit. So I win either way. Okay. If this breaks up, my trade is going to continue making money. Right, but just to give you guys the levels, I am bidding this zone over here. I'm bidding 53K, I'm bidding 56K. I'm also bidding, I think it's the Tenkin, and that's right in the middle. Yeah, I'm also bidding 55K. I'll tell you from experience though, the Kijun is a really, really, really good spot to have some bids just placed, like spot bids, spot bids. I'm talking about, these are all spot bids. When the market does come down to those levels, I will assess to see whether or not the market wants to come further down to the Kijun, and then I will start putting on leverage trades accordingly if I deem it valid. At the moment, I'm not placing leverage trades at those positions because we don't know how far the market can slip underneath you and liquidate your entire account out, right? So if I put on a 5x leverage and the market goes down 20% below my level, I'm done. My whole account is gone. So I'm not risking that. It's stupid to risk that. But spot bids at 46K, holding some spare cash for 46K, you'll be surprised as to how often the market hits the weekly Kijun. Let's go and do a quick test right over here, and then bounced, went through right over here. It didn't quite hit, right? So you can kind of front run it, I guess. So here too, here Tenkin, and then yeah, Tenkin bounce. Previous market didn't do it a single time, eh? I guess I'm living what happened in 2017. That was my most educational cycle. You have incremental lessons after that, right? Like you learn things that are crucial in cycles that come after, that transpire after, but the biggest phase of your learning happens in the beginning, right? The most, right? You learn the most, but then after that, things are like a lot slower but critical. Yeah, so Kijun over here too, the bearish retest. You guys remember this one? Yeah, so having some spot bids over here, you'll be happy that you kept some spare cash to buy the Kijun retest, because the market could come down to test the Kijun and still hold structure, right? But I don't know whether I would want to wait for that. I'm trusting the dynamic over here, guys. I'm trusting the dynamic. I've been dumb not to trust it in the past. I'm just playing it. So if you guys don't have access to the dynamic, your levels, 56K is the upper level at the moment, and 53 Just say 53. This will dynamically adjust every week, and I will give you guys the updated levels. I'm under the impression that those triangle flag patterns don't really matter. Shouldn't we concentrate more on horizontal price level instead? No, patterns matter a lot. In fact, more than support and resistance, in my opinion, as long as you understand that patterns are a representation of trend. If you look at patterns as a way to understand trend, right? Because that's what they were really created for people who have a harder time understanding trend analysis. In my opinion, that's what they were created for. And trend analysis is more important than support and resistance, according to me. So trending markets will always make you far more money than ranging markets, right? Unless you want to be that kind of trader who's constantly trading range, and you're hoping that the market never breaks out because you want to live that boring life. Yeah, by all means, just trade, just be an options trader at that point. You'll make your life a lot easier too that way, right? Instead of trading support and resistance on futures markets. So over here too, the reason the pattern matters, buddy, is because what you're looking at are these high lows staying intact, right? Even if you're looking at the support and resistance, it's still you looking at, let's say you're looking at support and resistance, okay? You're still in a way looking at the trend, because if we lose this level here at around 65,000, it's as good as looking at the line chart and saying, hey, I'm looking at the high low over here. Right? If you're looking at the candlestick analysis chart, candlesticks are just, again, another indicator, right? It's just another indicator that's giving you more information. At that point, you're looking at all these high lows staying intact, right? And then we break down, you're saying that, hey, we've lost the trend. We've lost the high low structure. Well, if you're looking at support and resistance, you're not looking at the wicks, you're looking at the candle closes. Support and resistance is literally a way of looking at trend analysis, but looking at only the candle closes, really. Well, depends, right? If you're marking on the wicks, then you'd be looking at this level over here as your key support level, right? And you could mark out a zone, I guess, and say this, right? It's the same thing. It's the same thing. Like, it's the same thing. But the reason you look at patterns is a way to visualize support and resistance, and is to visualize trend analysis. And it's a lot safer to look at patterns, because it'll give you an idea of what the market is doing in regards to how eager they are to sell resistance, right? Because if you're looking at support and resistance, you're like, okay, cool. Here's my support, here's my resistance. But if you don't look at the pattern, you're not looking at the fact that you're not looking at the fact that the sellers are coming in quicker to sell each time, right? That's what support and resistance, that's what pattern trading is a representation of, what the behavior of the market is, right? And it's showing you that, hey, I'm putting in lower highs while also putting in higher lows. So the market is trying to decide right now, are there more sellers or are there more buyers? We're coming into equilibrium. Once the market decides, once the market figures it out, we're going to have a direction. Right now, there's an equal probability of breaking up or breaking down in this range of support and resistance, right? Well, if you're looking only at support and resistance, you're ignoring the fact that we have a big impulsive move where the high time frame trend is towards the upside, right? And that inches the probability towards which direction we break out. So yeah, you have equal probability within that range of prices breaking in either direction, but the probability of breaking up now pushes on over to the buyer side because of this impulsive move, right? And then your Elliott wave traders are going to come in and say, hey, we have wave 1, 2, 3, and this could be the 4th wave leading into the 5th wave, right? Something like that. And then you'll have your accumulation distribution Wyckoff traders also having an analysis over here. Then you'll have your support and resistance traders who are like, okay, I want to keep my life super, super simple. I'm going to be looking only at this range. Nothing else matters, right? So it all comes out of the same thing, dude. It's all the same thing. Everyone is trying to read what the market behavior is without realizing it. And the best way to read market behavior is trend analysis. Okay, I think I'm done, guys. Did I cover everything that's important? Dashboard. What I want us to look at is this corner here, this right-hand corner here. We're going to go through all the time frames because this is market-wide trend and market-wide volatility. Okay, we're going to start with the 4 hour. How's the 4 hour doing? 4 hour saying short, saying that market-wide, the market is having a low time frame pullback with the volatility pretty nice actually, right? So if you're looking to put on short trades, low time frame short trades, right? You don't want to hold on to these positions for long because you will be coming down on over to weekly support, 4-day support, monthly support, all these key support levels that you'll be trading against. So take those lower time frame trades, hedge your positions if you want to, and then rebuy at those higher time frame levels if you want to, depending on your cyclical. Don't overtrade though. Don't overtrade. Make sure you're sticking to a strategy. I'm not doing this. Just FYI. 12-hour short. 12-hour has been a really good barometer for us, right? This entire cycle as to whether or not we should be putting on leverage trades or not. Based on this over here, it's telling you not to, right? You should not, or rather, it's telling you not to leverage trade in the bullish direction, okay? So if you have decided I'm going to be only bullish until the market flips on the high time frames, the 12 hours telling you to at the very least hedge your positions or at least close out your positions until we get momentum moving towards our side. Okay, it will come. Just be patient. This has been a really good barometer for us. So I really don't want to trade against this. Flipped on Bitcoin, short 2 days ago. ETH as well. Sol as well. So yeah, Sol in fact volatility looking nice. So be careful there. Just look at the 200 moving average. Yeah, it's golden ticket. Daily neutral. Daily is consolidating, which is good. Okay, so it's only the 4 and the 12 hour that are a bit concerning. The daily is looking fine. Volatility ain't too bad either. 2 day long. Okay, 2 days still long. 4 days still long. Volatility is actually really nice, and the weekly is long as well. So in the grand scheme of things, this could be an impulsive move on the higher time frames with a pullback, right? Your pullback on the lower time frames, which is essentially what happen. If you look at this objectively, look at the data, right? Forget all the emotions in the market, forget all of the unemployment data, the recession data, oil going crazy. Apparently oil is scaring a lot of people as well. You forget all of that, you just look at only this. You're like, based on my trend analysis, this could be an opportunity. The low time frames come down, press down on the high time frames and break the trend, but you got to play what's in front of you right now, right? Living in the mango tree house. Weekly wall is red, yeah. It flipped red, I think, last week. All right. I hope you guys enjoyed the stream. I wanted to focus only on. Man, I did promise though that I didn't promise, but I did mention on the live on the title that we cover Sol, Pepe, PP, and ICP. So that was just literally last stream's title that I just copy pasted. So let's go to all of them really quickly. Sol. On the dashboard, 4-hour short, 12-hour short, flipped 8 hours ago actually. Volatility looking really nice. So we may not want to see, but we may see a little bit more downside on Sol. Let's go ahead and look at the charts on that though. I'm not too convinced because the daily is looking good, the 2 days looking good, the 4 days looking good, the weekly is looking good. So we'll start with Sol USDT. I'll just give you guys though my high time frame targets on Sol. I'm still looking for all-time highs to hit, as long as we're living above this zone over here at 135. As long as we're living above 135, I am looking towards 253 at the very least to hit, potentially around $327, which is the target that I had from last cycle. I'm not sure how I came up with that, but I've been using all of my levels from the previous cycle and they've been working, so I'm not going to change anything, right? These are all my levels from the previous cycle. You guys can go ahead and take a screenshot of this if you want. I know it's a mess, but it's been very useful in making me money this cycle, so I'm keeping them all here. I'm looking for all-time highs to get hit as long as we are living above 130. That was my key level and it's still intact. That's the weekly, but let's go ahead and look at the lower time frames. I'm going to start with the 4 hour. The 4 hour, yeah, you could easily make an argument over here for why this should come down, right? This trend over here, we lost it, and then you could look at this as a measured move to target these lows here at 163. Yeah, so Sol could come down to 163. The 12 are also flip long, sorry, short, and volatility is low, so this could have another move down. Be careful, be careful. This could go like this. So yeah, that's the bearish case based on what the dashboard's saying, to stay short or stay hedged on Sol. All of that gets invalidated if we start closing candles above 192. So if we start seeing 12-hour candles, multiple 12-hour candles above 192 over here, this this continuation pattern, that should be a continuation pattern, is going to flip, and people who are short are going to close out their positions here, and this is going to drive up, right? So this is going to turn into a W pattern instead, and we're going to close above and look towards more upside. So all of that could flip. So that being said, just trade what is easy, right? And I wouldn't want to be long over here, Sol. Maybe over here above this level. Okay, that's all. You guys have my lower time frame expectations. You guys have my higher time frame expectations. My higher time frame expectations for now, as long as we're above 130, is still going to be all-time highs. ICP. Ooh. Oh, this is a weekly. Let's go. Let's go to daily. Yeah, shit. This is looking great. Holy. This is really good. 12 hour long. Still stayed long for 12 days. Wall looking good. This is strong. So this could be just giving us an opportunity because of the market being bearish overall. Ugh. Yeah, the weekly looks so good, man. This broke out. I think I showed this chart to Krisha, and again I think it was John Gunry, right? John Gunry who messaged me about this one. And I was like, damn, the chart looks so good. And he messaged me when the candle was here. And I did see continuation immediately. This is looking really good, man. Really good. The 4 hours looking a bit weak, but I'm going to attribute that towards the rest of the market being like weak over here, right? So this likely wanted to continue and then took out the high. The market was like, nope, we are not ready yet because we are not feeling confident based on what Bitcoin is doing, etc., etc. But look at this. If we clear this on lower time frames, right, we have like a weird inverted head and shoulders pattern here. Any multiple 4 hour candle closes above 18, likely going to test this high over here at 21. But playing this on the weekly is likely what's going to give you a big win. Let's go ahead and turn on the Ichimoku cloud. Yeah, target would be around $45. Great chart, ICP, great chart. Where's the dashboard? It's definitely worth setting an alert on this one. Alert on what though? It's long. Can't even set an alert on this one. It's just long across all the time frame. This is fantastic, man. This is really good. Okay, and the next one is Pepe coin. I have it right here. So Pepe broke down, guys. We had 10K test. Did not see that. So we had this structure, this bull flag structure that I'd drawn out for you guys. Wait, why is this like this? Let's adjust that. OCD. Yeah. Anyways, broke down right over here. Seeing support on the horizontal though. I'm gonna go ahead and make this look a tad bit uglier. Okay. Remember, we were looking for this to break above the zone over here. It did not break above the zone. If it does break above the zone, that trade is still intact in my opinion, because at that point you'll just be adjusting your bull flag to be like this, right? So your high lows would get adjusted. So keep that in mind. The trade activates above this level. That doesn't mean you short it if it breaks underneath this zone over here out. Where would you short this if you did want to short it? Because the wick lows are all the way here, right? You don't want to be shorting it here at this current juncture, because we are holding both. We're holding horizontals and we're holding the wick lows. If you're looking to put on a short on this one, it might not be a bad idea to hedge your other positions, right? So you don't want to go net short in these market conditions. But looking at a meme coin and saying, hey, this has run way too much, it's an easy short to, you don't want to time a top on coins that have been running too much. You want to have a way to be like, okay, this is an easy play for me to hedge against my other positions, because it's easy for me to know I'm wrong on the short, right? So you'll be essentially using this horizontal along with these wicks over here as your way to get confidence towards the downside. But if you close above the horizontal again, that's your activation of the trade. My invalidation is going to be above this level. Yeah, so closing above this level over here would be me wrong on the trade, because this could very well break down underneath here, come up, test this level here too, and then break down again. Close above this level as well. Could close above the zone and then break down again. So you have a structure that's like this, like this, like this. All right, those 3 coins are done. I'm done. I hope you guys enjoy the stream. I'll see you guys in the Seed Clubhouse session. Until then, do the mango way, do the easy way, do it the stress-free way. Cheers, man. Thank you all for joining. Thank you, Julian. The main goal for today's stream was the health check, right? I wanted you guys to know my thoughts on how I'm looking at the monthly, how I'm looking at the weekly, how I'm looking at the 4-day, and how it all comes together. How we can use the day time frame to get an idea of how the 4-day wants to move, how the 4-day can protect the weekly. If the weekly closes well, then everything is okay. If the weekly closes badly, then we can start looking towards those downside targets on the weekly dynamic. I've given you guys my weekly dynamic levels. It's around what, 53k to 56k-ish, right? You guys have everything you need. I'll see you guys next time. I'll see you guys in the Discord. Until then, do the mango way. Ciao.